Good morning, traders. Thanks for joining us on this Friday, October 10th, with our Gamma Edge pre-market prep. This is Michael coming to you from Gamma Edge TGIF. Hope everybody's had a great week. As always, like and subscribe on X and YouTube, and you'll be notified when we go live with content as we do every day for our pre-market prep, as well as our midday review and then our post-market recap. As always here at Gamma Edge, we cover three pillars: sentiment, structure, and trend. If you followed us for any amount of time, we're going to go ahead and jump right into the trend portion of that section that we go through every day. This is our market trend model. Is based on the tick index, that is buying versus selling in the overall market. You can research that at your favorite investing website. But quick orientation is the bolded white CT is our intraday instantaneous cumulative tick. Again, that's indicating buying versus selling in the overall market. And we've seen it decline for the past few days. We've talked about the weakening position of the overall market trend model and turning off our mechanical portfolios. Again, we saw what we call a linear down day yesterday, almost a 45-degree angle in the cumulative tick to the downside. This again is indicating significant selling in the overall market, and we're below these shorter term moving averages, what we call railroad tracks. Again, we just place those on there to give us an overall momentum of a time indication of a trend that's occurring on a shorter term time frame. And then our colored ribbon is our longer look back period for positioning. And on the tick US here, which is all exchanges, we are getting a bearish signal of the red crossing below the cyan and what we call a ribbon flip or a colored ribbon flip. Up here, new highs versus new lows breadth indicator. We did have new highs just barely outpacing new lows. But then our filtered cumulative tick indicator, the plus 1,000, minus 1,000 larger block orders, was significantly to the downside. As you've seen really the past 2 or 3 out of 5 days. On Wednesday, we had significant selling, as we pointed out, from institutions, and obviously conversely moved to the downside. And then yesterday was fairly flat. And then again, Tuesday was linear down. Wednesday was fairly flat. And then yesterday, Thursday, was another linear down day. So again, institutions look to be selling pretty significantly in this market at the moment, and their cumulative tick well below 0. All right, moving on to tick RC. Again, this is how we base our mechanical portfolios, what we call our P-Trans to PX portfolio, as well as our wheel strategy. And we're below the ribbon now. I discussed yesterday we were at an inflection point in the market trend model as we are trending sideways, and this could go either direction, to the upside or to the downside. Obviously, we emerged to the bottom of the ribbon. So again, if we stay below the colored ribbon for a significant amount of time, this will turn the red below cyan, and again, put us in a more bearish state for the overall market. So we'll watch this intently. We have historically just undercut the ribbon and then moved back above, to a longer term stance and back to an uptrend. So this still may be a longer term or a shorter term pullback and a longer term uptrend, depending on how we navigate. Really, the next few days will be important to watch for the market trend model. Again, if this does another linear down day, then most likely we'll continue on for that ribbon flip, and then we'd look for a little bit more bearish positioning in the overall market. All right, moving on to the SPX options complex. We separate the SPX-A from the SPX-P. Again, the SPX is the largest notional options complex, and that's what we like to look for market positioning. An interesting chart came out. We were discussing about futures or options data on futures, and the SPX just completely swamps the SPY as well as the ES for options and data for futures. So that's why we continue to look for the SPX. You can look for that chart on x.com. But yeah, it's basically telling us that we are producing the content we need to produce to have an overall understanding of how market participants are positioned. So SPX-A, call dominated above and below spot price. We do again see some out of the money put hedging via these red net deltas down below us. Again, just could be speculative. Little commentary here. So really nothing's changed. Supportive to the upside on out of the money speculation, supportive on the downside. Unless we see an erosion of this left-hand plane below spot price continue, then we'll get a little bit more bearish. And you'll notice that transition areas here have come up under spot price. So again, some out of the money put speculation positioning under spot price as we head into the October expiry. So we'll continue to watch this day over day. Moving on the SPXP, we're still call dominated above and below spot price, but again, some out of the money put hedging continues to come in. As you notice, some of the green net deltas changing to red, which is Again, not necessarily bearish as we continue to see the transitions advance up. So this is indicating more put speculation is coming in to the overall complex, but being below the transition areas is bearish. And if we see this left-hand plane continue to erode without the money put speculation, then that obviously would lead us to be a little more bearish. You'll notice between Friday here, we got 28%, and then next Monday, 10%. So about 38% of the GEX comes off of the overall complex. So again, where that gets positioned will be important. All right, let's move on to the SPXP. This is what we call our gamma edge ratio. This is basically short dated call gamma versus short dated put gamma. Obviously, the gamma is the time component, so you could look at this as a put call ratio, but we look at the overall gamma component too. So again, we've discussed about the ratio being above 1. That'll give an edge to the bulls. Obviously, with SPX up and declining GEX ratio though with a negative slope, again, that's telling us that short dated call gamma is leaving the overall complex and short dated put gamma is starting to enter. So again, if this drops below 1, again, that would put the put speculators in control. As of now, call speculators are still maintaining control with this kind of ebb and flow and sideways action we're seeing within the SPXP. So we'll continue to watch that. And moving on to the delta balance. Now, this gives us an overall view of each what we call plane, which is above and below spot price for market participant positioning. So the green is the right-hand plane that's above spot price. That's your out-of-the-money call speculation, as well as your in-the-money puts. And then the red dotted line is below spot price. That's the left-hand plane. So those are your out-of-the-money puts, as well, out-of-the-money put speculation, as well as in-the-money calls. And then the blue is the aggregate of both of those. So again, we're maintaining above 0. So the right-hand plane is negative slope. So we're not seeing that out-of-the-money call speculation, which is what is also showing on the GEX ratio. And really to the upside, we're just not seeing a significant amount of speculation. Left-hand plane, the in-the-money calls are still staying supportive as of now, unless we start to see this turn to the downside and delta balances at 1. Now, projection on out in time, we do see the left-hand plane drop below 0, but then recover. Right-hand plane pretty much stays stagnant into next week. And the delta balance is kind of bouncing between 0.5 and 1. So again, this is not necessarily significantly bullish, but not necessarily bearish either. So we could just see some chop really into next week, obviously into expiry. So we'll continue to watch that monthly expiry. All right, moving on to the SPXP net stack command. This is high sensitivity levels for today. Again, in the money calls below us and out of the money calls above us, and then net charm, net gamma, and net Vanna. So high sensitivity levels on any pullback, as well as the charm components, as well as the gamma and Vanna components. So you can look at those as we head into today. Moving on to the SPX 0DTE, drunken sailor range, 6750 towards 6700. Implied open is somewhere around 6725, 6730. So we'll open right within the overall drunken sailor range. So again, this is that low exposure congestion area, which can be extremely choppy for market participants. And we'll watch our intraday vol M command to see how market participants are positioning. Yesterday, market participants, we had what we call a crossed centroid or crossed chopsticks. That basically was indicating that we're going to see an overall consolidation day, choppy back and forth, which is what we saw for most of the part of the day. Early weakness, and then we recovered, and then was just choppy the rest of the day. So if we're above transition area for today, 6750, we'd look for a move up towards 6775. If we're within transition, we'll look for this to be extremely choppy, 6730 to 6745. Below 6730, we'd look for weakness, most likely be short for a move down towards 6700. And we'd anticipate 6700 to be supportive. If we get below 6700, obviously be looking for a little bit more weakness to the downside. Key takeaway is we are call dominated as we start the day. So this should be supportive on pullbacks. And we have a decent amount of net GEX at 11,000 to support this call dominated overall structure. All right, let's move on to the trading view chart. Again, I've overlaid our scripts for this morning, as well as 0DT transition and drunken sailor range. You'll notice we rejected already at the top of the 0DT transition area. So again, that's going to be a key area as I just discussed. If we get above transition, we're being a little bit more positive gamma call dominated environment for a move to the upside towards 67.75. We do have prior day high up there at 67.65 also. If we're below the transition area of the 0DTE as well as all expiries, you see there's a confluence here of 0 GEX in trans, 25 to 30. Again, below that, then we anticipate some more weakness down towards prior day low, as well as COTMP, and the bottom of the drunken sailor range would be that target down towards 6,700. So fairly well defined if thens for today within the overall 0DT transition, even though we're 15 points wide. as historically that's usually 5 points. So that lets us know that there's significant uncertainty from market participants in this congestion area, and this can be extremely choppy for today. So really it may be a no trade within the 67.30 to 67.45 area. It may be difficult, obviously, if we're just chopping back and forth between the top of 0DT transition as well as the full expiry transition areas also. So with that, make sure you come join us at gammaedge.us. As always, you can put your email in for our newsletters here, and you'll be delivered those on the weekends beyond the bell newsletters about our thesis and tools. Check out our free courses, Game Edge FastPass, as always, our flagship options course, as well as 2 other courses. And then click on the pricing tab. You can come join us in our Discord, just an extensive community of traders from all backgrounds, all experiences, from former market makers and money managers to new traders trying to navigate the SPX option structure. And we show you how to use our tools. The Game Edge team is in the trenches with you trading using real money and in the Discord. So we'd be happy to join you and happy to explain anything to you. All right, let me know if anybody wants to go over any individual equities this morning. I'd be happy to cover those with our web app. As always, it lets us know and gives us a view into the SPX or into the option structure and positioning of market participants on individual equities. So we can look at some individual equities also that I have set up for this morning. Obviously, we always look at the Mag 7, NVIDIA, AMD significantly above COI, Apple above P-Trans COI. You'll just notice again a theme that we're above most of these key gamma delta levels and being supportive as we move through the day. NVIDIA plus GEX and COI up there at 200. So HON and CRM, yeah, we can take a look at those. Honeywell. Thanks for joining us, Nick. So Honeywell's put dominated and below the overall transition level. The only thing with Honeywell is it doesn't have a significant amount of total OI. Obviously, it runs through our 100,000 OI filter, but not a lot of OI for this expiry, as well as next expiry looks decent, but put dominated below transition levels. So very weak structure for Honeywell. Let's take a look at CRM. CRM's call dominated above transition area, so that's supportive. PGX CY up towards 300. So obviously a significant move up for that from 245. The expected move is 6 points, so 2.32. So you're only looking for a move up towards 250, which would be COTMC on that. This expiry, PGX 245, so not really looking for a significant move up there, and 250. See what the next expiry looks like. We do see PGX at 250, COI at 270. So not a lot of upside speculation on CRM also. All expiries, yes, but not this short expiry for the next 2 weeks, no. So, yep, absolutely, Nick. No problem. All right, everybody make it a great Friday. Thanks for joining us again. We appreciate all the interaction through the week. Again, like and subscribe on X and YouTube, and share our content, and we'll see you later. Thanks.